Hi, ladies and gentlemen. This is Darren with Security Token Network. I'm here in Mongolia with Charles Hoskinson, CEO of IOHK. So, Charles, why are we here in Mongolia, first of all?
Well, I was invited to the Frontier FinTech Summit, and it's a great event to meet lots of members of the Mongolian government as well as the Mongolian private industry. It's all about FinTech, and a big chunk of FinTech is blockchain technology, cryptocurrencies, and so we're definitely really excited to be here and meet the best and brightest the Mongolian jurisdiction has to offer, and also get a sense of the appetite of the Mongolian government for innovation, as well as opportunities in various different industries, in particular the mining industry, education sector, IoT opportunities, as well as agricultural opportunities. AgTech is definitely something we're quite interested in thanks to our Pan-African portfolio, and there's definitely a lot of synergies and similarities between what we do in Ethiopia and what we plan on doing here in Mongolia.
Okay, great. Thank you very much. And so I understand that IOHK is involved with a project called Cardano. Can you tell us a little more about Cardano and what are some of the possibilities with Cardano specifically regarding security tokens?
So Cardano is a kind of a new and an old project. Cardano has actually been around since 2015, and during the origins of that, we came on board as the development research partner. So we look at Cardano almost like a DARPA project, where we said, let's see what we can do in 5 years. Let's go from 2015 to 2020, and throughout the course of those 5 years, we embraced a pretty dense research agenda, pursuing high-risk, high-return research, and a pretty dense engineering agenda. And really, there were three focus areas. One was scalability, one was interoperability, and one was sustainability. So we wanted to build a system that was like Bitcoin, but better for everybody, and could work for everybody, meaning that it could have millions and billions of users. So this required fundamental innovations in computer science. Second, we wanted to build a protocol that could talk to a lot of other protocols. There's a legacy financial world, trillions of dollars of assets are in it, and then there are thousands of cryptocurrencies, and a lot of them aren't going to go away. So it's just as meaningful to talk about the Internet of Blockchains, or the Internet of Value, as it is to talk about your own blockchain's capabilities. And then finally, we were very interested in sustainability, namely the who pays and who decides side of our industry. The who pays side is, well, who funds the development of these decentralized systems? If you think about products like Microsoft, Windows, or products like Office, it's very obvious when you look at iPhone or Office or Windows, who covers that? Microsoft and Apple. But what happens when you remove Apple and Microsoft from the equation? Who would build the next iPhone? Who would pay for the next version of Windows? So society and businesses aren't really well constructed for this concept of a headless company or permissionless companies, or this idea that there's no leader, especially when it comes for the distribution of capital. So one of the cruxes of the project was to discover alternative ways of sustainably funding development of the project and sustainably funding the growth of the project throughout the entire world. The other side is the who decides. And that is all about, well, how do you come to a consensus about when and how to fork the protocol? How do you go from, let's say, one signature scheme to another that's quantum resistant? Or you have to make a philosophical decision about the level of privacy the system will have. So who should decide that? Should it be me, the core developer? Should it be some foundation? Or should it be the token holders who actually run the system themselves? So the point of the Cardano project was to explore that entire space and come up with a sustainable system that wouldn't just work today, but it would work throughout the future. So that's where we started in 2015. And there's been a lot of innovations along the way. It had a very compliant crowd sale. There was a tremendous amount of academic research that's been done. Over 40 papers have been written, 20 have gone through peer review at major venues like CCS Crypto and Eurocrypt. And we've actually written 2 completely independent code bases, one in Haskell and one in Rust. Now, as we start going towards decentralization and going towards computation, we are now having to actually have discussions about the next generation of products that are going to run on our system. And the most talked about and sexiest product we can see is the security token, which is a really interesting industry, and it's something that's going to make the ICO business look like small potatoes. $5.4 billion of ICOs were done in 2017. It's entirely possible that on the STO side we could see $50 billion or $100 billion a year of security token offerings. So what is a security token and why do we care? So a security token is basically a representation of a security, but made manifest in the cryptocurrency world. So it's kind of a marriage of both worlds. One world is a world of regulation, compliance, a world of metadata, a world of broker-dealers, a world of closed systems. And the other world is a completely open system, usually an anonymous system or a private system, a world that doesn't talk about metadata with transactions, or at the very least hiding of that. And so on the outside, both of these worlds look fundamentally incompatible. But it turns out that what you can do is hybridize them. And you can take the best concepts from both worlds and put them together, and in the process of that, be able to do all kinds of really magical things, such as cross-border settlement, such as embedding the regulation into the transaction itself, such as automation of compliance, such as the ability to be able to communicate with all of your investors at once just by clicking a single button and getting confirmation that they actually read your message. I mean, there's endless possibilities. So there's a huge amount of excitement within our industry of who is going to be the first to take security tokens and bring them into the cryptocurrency world. We see ventures like Polymath exploring that with Solidity contracts on Ethereum. We see exchanges like T0 trying to build out foundational infrastructure to provide marketplaces for these to trade on. And on the Cardano side, we're quite interested in looking at all the standards of the market and trying to be interoperable with them so that when these tokens are issued, they can be understood by our system, managed by our system, accounted by our system, in order to very least allow it to be a path-through for our system.
So why are you in Mongolia, and what kind of applications can security tokens have for frontier markets?
So Mongolia as a frontier market is actually very attractive. It's a market that's relatively new. It was part of the Soviet Union until 1990, and Mongolia's economy was tightly state-controlled. Now they're introducing free markets. Now they're making foundational decisions about what their regulations are going to look like, how the banking infrastructure, the payments infrastructure, and generally speaking, what kind of country they want to be. And there are tons of very valuable industries here which are undervalued by the global markets. For example, Mongolia is one of the world's largest suppliers of cashmere. Unfortunately, they just don't get great prices on it, and they don't tend to process the cashmere that they harvest here in Mongolia. They tend to ship it to places like China. So as a result, they sometimes get 10 cents on the dollar for those transactions. So this is an issue of finance. Should they have the proper capital structure, they'd actually be able to get the money necessary to buy the machines, get the training, and start the companies to upgrade that cashmere to export grade, and as a consequence, make orders of magnitude more money on what they're already doing. So the point of security tokens is to scale. It allows you to do what you would ordinarily do with an IPO to retail investors only after a company is incredibly mature or advanced in Western markets, and scale that all the way down to the SME space, the small to medium-sized enterprises. So your company may only have a cash flow of 10 or 15 million per year. You'd still be able to structure an offering, and you'd still be able to get great returns, in many cases better returns than larger companies can, and in some cases even safer returns than larger companies can, because some of these businesses have been operating for quite some time. And the point of the STO is to give a new set of tools to take those types of entities and tokenize them. So IOHK is always very interested in these types of jurisdictions, not just cashmere, but also project finance for things like mining. And we can even talk about auditable, socially responsible projects. For example, when you're talking about mining, usually people pay to develop the mine, but they seldom have that conversation of what happens when the mine closes down. Where will the money come from to remediate the land? That can take 10 to 15 years if good practices aren't followed, and it just takes time to restore wildlife and get things back to where they were before the mining occurred. So if you're trying to project finance, it'd be really cool to see if you could take such things, put them up on a blockchain, put the claims, the actors, the capital, and get strong cryptographic guarantees that there's money set aside for each stage of the project. The exploration, the development, the maintenance, as well as the closing of the life cycle of the project. So STOs are part of that conversation. They're not the only part. They live within a broader regulated ecosystem, and they do have to be traded on regulated markets. But these are the next generation of opportunities, which are quite lucrative, but currently do not have liquidity. And as a consequence, are only controlled by a small group of people who are getting very rich off of them. And what we're doing with STOs is democratizing finance, and we're bringing these great opportunities to everybody, not just the privileged few.
Okay, great. So Security Token Network just published a report in Q1 that 90% of the STO offerings are in North America or Europe. But here you are in Mongolia, and you spend a lot of time in emerging markets. So you mentioned mining, you mentioned other projects, finance. What kind of foreign investment opportunities are interesting for you in emerging markets?
Generally speaking, emerging markets have enormous amounts of value in them. Their economies are growing very quickly, but they're held back by inefficient processes, they're held back by bad regulation, they're held back by bad brand, by issues with rule of law. There can be a lot of factors there, but yet the people really do want opportunity and are willing to work for it. And the population dynamics are such that among the youngest people in the world happen to live in countries like this. For example, we're also in Ethiopia, and 70% of the population is at or under the age of 30. Which is a really incredible statement for a 106 million person country. So while the initial wave of STOs has definitely come from North America, that's really just the proof of concept to verify that the tools are working correctly with really savvy, bleeding edge entrepreneurs. But the reality is there aren't really strong capital markets in these types of jurisdictions, Ethiopia, Mongolia, and so forth. So when you introduce the STO, you're actually getting a monopoly. You're not introducing an alternative structure, you're introducing a completely new structure that is going to allow people to, for the first time ever, get liquidity. And as long as you compare that with ethical business practices, auditing and oversight, and good regulation, you ultimately can result in a tsunami wave of these great products. And these products are ultimately going to be far more attractive to invest in for the average investor than it would be for an American equivalent. A, because generally they're based on companies that are pre-existing, that have much lower risk profiles. B, they're based on companies that are within jurisdictions that are experiencing unprecedented economic growth. C, things tend to be underpriced in a lot of these jurisdictions. And D, finally, the investment sizes are generally smaller, and they're not really attractive to institutional investors at the moment. So the retail investor can actually now have almost like their micro hedge fund and have a chance to really explore and have fun with a lot of exotic assets.
Okay, interesting. So STOs can be some sort of technological leapfrogging for capital markets in emerging countries.
Absolutely, and not only can they leapfrog, they can innovate the whole spectrum of financial products associated with the security. For example, you can build into the security standards for how derivatives, like an option or a futures contract or whatever it might be, can be connected to it. You can't simply do this. These assets tend to be segregated, separately regulated, and traded on different exchanges. But now you can make these assets aware of each other. And so not only does it innovate on the retail investor side and the issuance side, it innovates on the regulatory side. Because at any given time, the regulator can have a much better view of what is in distribution, what's being done in distribution, and also how much systemic risk the ecosystem has accrued.
Great. And I guess for the final question, let's keep on the emerging market STO opportunities. What do you think the time frame is for this basically burgeoning industry?
I think it's going to take 3 to 5 years for regulation and infrastructure to get to a point where STOs become commonplace and attractive. If we look at STOs in comparison to ICOs, the first ICOs were done in 2013 and 2014. Mastercoin, MadeSafe, Angel Shares, Ethereum, respectively. And then very quickly, people started realizing that this was perhaps a great model to finance. And in 2017, that's where we saw the peak of that. So there's about a 3-4 year lag there. And I think the same thing will occur with STOs within specialized jurisdictions that are willing to take that risk. On the U.S. capital markets, it'll probably take longer, 5 to 10 years. And at the moment, they're probably only going to be attractive to people going through traditional securities regulation.
Okay, great. Charles, thank you very much for your time. It's been a pleasure spending time with you at the Frontier FinTech Summit here in Mongolia, and we look forward to seeing you in a future interview.